Everyone, and welcome back to Forex Scope, your go-to channel for in-depth Forex analysis. Today, we're diving deep into the AUD/NZD pair, bringing you a quick but crucial analysis on both the 15-minute and 1-minute timeframes. Get ready for some actionable insights and potential trading opportunities. If you're serious about your Forex game, make sure you hit that subscribe button and turn on notifications so you don't miss out on any of our upcoming videos. Let's get started. This support zone is identified as a significant area where price has previously shown a tendency to consolidate and reverse. Looking at the price action between the timestamps 176, 3400 and 176, 4300, we observe a clear period of indecision and sideways movement. The price repeatedly tested the lower boundary around 1.15682 and struggled to break below it, indicating buying interest at these levels. Specifically, the candles within this timeframe show a notable accumulation phase before a potential upward move. The high price during this consolidation was 1.15732 and the low was 1.15661, defining a tight range that acted as a floor. This area has demonstrated its strength as buyers stepped in to defend it, suggesting it's a key level where a bounce is likely to occur in the future, based on the principle of price memory and the formation of a sideways accumulation pattern. The repeated interaction with this price range solidifies its importance as a support. This resistance zone is clearly defined by a significant price ceiling that has been tested multiple times, showing a strong barrier to further upward movement. Between the timestamps 176, 6700 and 176, 7600, the price encountered resistance near the upper boundary of 1.15816 and was unable to sustain levels above it. The data shows a period where the price made several attempts to break higher but was met with selling pressure, pushing it back down. The high price observed in this range was 1.15816 and the low was 1.15792, forming a narrow consolidation band that acted as a resistance. This area represents a point where sellers became more aggressive, limiting the bullish momentum and indicating a potential reversal or pause in the upward trend. The repeated rejections from this price level underscore its significance as a key resistance. This resistance zone at approximately 1.15754 to 1.15756 is identified due to a clear sideways accumulation pattern observed between the timestamps 176, 281, 5600 and 176, 281, 5900. During this period, the price struggled to break decisively above the 1.15754 level, indicating a strong selling pressure or a consolidation phase where buyers were unable to push the price higher. Several candles within this timeframe show the upper wick reaching this price range, signifying rejection of higher prices. The multiple touches within this narrow band reinforce its significance as a resistance level, where sellers stepped in to defend this area, causing the price to reverse or pause its upward movement. The price then dropped significantly after 176, 281, 5900, further confirming the strength of this resistance. This formation suggests a psychological barrier where traders might have placed their sell orders, anticipating a downward movement from these elevated price points. This support zone, ranging from approximately 1.15733 to 1.15736, is identified by a series of price actions between the timestamps 176, 281, 4220 and 176, 281, 4520, demonstrating a clear sideways accumulation and multiple touchbacks. During this interval, the price repeatedly found buyers at these lower levels, preventing further significant declines. The presence of several candles with long lower wicks suggests that when the price dipped into this zone, there was immediate buying interest, pushing the price back up. The multiple instances where the price tested these levels and bounced back indicate a strong support where demand is consistently present. The consolidation within this range suggests that traders were actively defending these price points, leading to a period of equilibrium before a subsequent move. The price managed to stay above 1.15733 for a considerable period, showing its resilience as a support area. The AUDNZD currency pair is currently trading around the 1.15751 mark, presenting an interesting confluence of technical indicators. We observed a recent upward momentum, with prices touching the upper Bollinger Band at 1.15756, suggesting potential buying pressure. However, the Fibonacci retracement levels indicate a potential pivot point around 1.15753 and 1.15731. Given the previous resistance at 1.15756 to 1.15754, and a support at 1.15736 to 1.15733, the price is likely to navigate through these levels. The initial projection is for a slight upward push towards 1.15775, potentially retesting near the upper Bollinger Band. Following this, we anticipate a retracement towards the 1.15740 level, interacting with the middle Bollinger Band and the Fibonacci support. Subsequently, if the bullish sentiment prevails, a stronger move towards 1.15785 and even 1.15790 could be observed, pushing towards the previous resistance area. Conversely, a failure to break the immediate resistance could lead to a steeper decline, targeting the lower support zones. The overall sentiment leans towards a consolidating market with potential for a short-term bullish impulse before further price discovery. Traders should closely monitor the price action around the identified Fibonacci and Bollinger Band levels for confirmation of the next directional move. The interplay between these indicators paints a picture of a market that is at a crucial juncture, with the potential for both upward and downward price discovery depending on the strength of buying and selling pressure at these key levels.